Hello everybody, this is Steve Rising with Thin Slice Trading at the Forex Trading Institute. Just a quick short video on, once again, typical daily FX price action. Today we had some central bank intervention which created a large move this morning, and we can see that move occurred right here at this point. And what I want to discuss is first off, when we start to learn how to interpret FX price action, it's important for the trader to understand that there are really only two primary reasons why price moves dramatically. We can either relate it to a data release or fundamental announcement, or it is a form of breakout where extended sideways conditions, price has then cleared the top or the bottom of the range, and then we get somewhat of a pronounced move. But those are typically the only two reasons. On occasion there are anomalies, as always in marketplaces, like for instance at the beginning of this year with the earthquake in Japan. We have some type of a unforeseen crisis that creates a large move. But under standard trading conditions, the two elements that create large moves in Forex are either a data release or the top or bottom of a range, and it's a form of breakout. The point here is that, once again, it's critical for the Forex trader to understand that the way a currency pair moves, or price moves in a currency pair, is not the same way price moves in a stock or a future. In other words, in a currency pair, the moves happen very quickly. In those two conditions, we can see this is one 10-minute candlestick here that the move occurred in. Our start of day here was at this point right here, and we had a little bit of back and forth activity, one big move, and then a little bit of pullback off of that move, and that's been the extent of it. Is one move within a 10-minute candlestick was the extent of the move. To take that a step further here, we can go over here to a 1-minute chart, and here is that exact same move. And in that 10-minute candlestick, the reality is that only 4 minutes of that entire 10 minutes, we have 1 minute here. This is 1-minute candlestick. Then we have a little bit of an area here where for 3 minutes price went flat, and then we got a little more of an extension of the move at this point right here for another 3 minutes, and that was it. That was the extent of the move. So even within that 10-minute candlestick, the move was only 4 minutes of that actual 10-minute candlestick. The reason why I mention this is because the Forex market is really not a market well equipped to trade on large time frames. It's not a market really for holding positions for extended periods of time. Certainly huge multinational companies, large institutions, investment banking houses can hold positions and overcome these dramatic 200 and 300 pip swings that we see, where price moves in one direction for a couple of hours and then immediately moves in the next direction for a couple of hours. But for the solo individual trader to be able to hang on to positions for extended periods of time, the size of stop that they would have to work off of to follow good sound money management principles is typically just too large for the average individual trader. We can also see, when we look at typical trend-based market philosophy, that because of this bullish move, the expectation would be for price then to continue to move north, because we have here, we have a high that was created and then a higher high. But as is typical with FX price action, what happens is that all we do is we top out and then reverse back around, and in fact a new range begins to form. The final point that I want to mention here is where we see this one particular move here that occurred, and then we have, once again, we have our move with our central bank intervention that occurred here at 8 o'clock today. Then just a little bit of an extension of the move about 30 minutes later, where we just moved a little bit higher, and that was the extent of the move. So we have to look at here as we come to the end of the day. It's currently just coming up on 5 p.m. Eastern Standard Time here November 30th, that now for the entire trading day from midnight to where we are now coming up on 5 p.m. into the trading day, that this was the overall move that occurred. And so what that does is, on a large time frame, it kind of sends an incorrect message to a lot of traders. In other words, here on our daily chart, this particular candlestick represents 1 day of price action. The perception being, if you went back and looked at this day on down the road. In other words, say for instance next week over here, you looked at this 1 day of activity, the perception would be that for that entire period of time, price was moving in one direction over an extended period of time, and that's not the case at all. Remember, the entire move that created this large green candlestick, all that happened from the charting algorithm is price is now higher than it opened, so it created this large candlestick, but that entire move was created in 4 minutes in the entire day's activity. So once again, this one large candlestick represents this 4 minutes of activity with this little bit of an extension here. I guess we could call it an additional 2 minutes right here. We're back to our 1 minute chart here. If you notice right here, back to our 1 minute chart here just to see there. So once again, in the entire day's activity, there was literally 4 minutes of movement to the north side that created this one pronounced bullish move. So this is why indicators don't perform well in the Forex market. It's very difficult to use trend following techniques in the Forex market because the type of activity that we get are these quick little bursts, which are really more so what are labeled momentum-based moves. When we use the term trend, we're really referring to an overall tendency of price action. When we look at a momentum-based move, they're short, they're quick, they're pronounced, and then as we see with Forex, market simply goes flat. And that's been the case today here as we move back to now our 10-minute chart, which is really the prime time frame to be able to effectively trade this market on an intraday basis. We can see now we've had pullback or reversal, and in fact we'll find ourselves in a new range as we move forward here. So one pronounced move for the day related to fundamental activity here that when it's all said and done really occurred just in a matter of minutes for the entire day. So the Forex market, perfect market to scalp trade, perfect market to trade on an intraday basis, not the best market to hold positions for extended periods of time. The primary reason, the moves are short-lived, and we can find ourselves bullish in one instant, 2 hours later, price is moving in the exact opposite direction. So once again, this is Steve Rising at Thin Slice Trading, or with Thin Slice Trading at the Forex Trading Institute. Take a look at my blog at rocksolidforextrading.com for more articles on typical Forex price action. Remember, the mission of a solid trader is first and foremost is to learn to be able to understand day-to-day price activity. Then it's just a matter of developing good solid setups, looking for those setups, and then trading those setups. So thanks for your time. I'm out of here.